Wednesday. Happy January 17th. Happy post Bitcoin ETF day, or actually week. We've had a very, very exciting week. It was a historic week. And what we want to discuss today is we want to recap what happened over the past week since we did the last live here. What were the things that were expected? What were the things that were unexpected? And then obviously, what do we see from here kind of going forward? And maybe we have some other fun things to discuss. Fabio, welcome. Happy Wednesday. How are you doing, sir? Give us a bit of a rundown, what's going on in the community. And then we're going to dive in a bit of some factual feedback on the last week. And then let's dive a bit into the juicy stuff.
Yeah, hey everybody. So I think that the short summary is we went from God candle to 30,000 is next within a week. Yeah, it was a bit of a buy the news, sell buy the rumor, sell the news event. A little bit, not that we saw a huge sell-off or so, but I guess I was certainly more bullish than what we've gotten, but it was definitely that a lot was priced in, and you brought some data actually on funds flow that we can look at, reflect a little bit on how the ETF launch was perceived, how what's the numbers and data behind it. Was it a success? Was it not? And then of course the much more important topic besides the reflections is what's next. That's always very important here in crypto. We live and feed on narrative and on stories. Yeah, but maybe you can. So on YouTube, Julian just presented a chart, Bitcoin year-to-date price. Maybe you can give us a little bit of insights for everybody that's listening. What's currently on the screen?
Yeah, sure. And if you're only listening in, then I think it's very easy to kind of paint the picture here. Exactly a week ago, we had speculated that we may see the approval of the Bitcoin ETFs. As a quick reminder, this was exactly the day after there was this fake tweet by the SEC account on X, and it turned out that was fake, but it also turned out that this was actually a hack, or a compromised account, let's call it this way, and not a false news from the SEC. Well, then on Wednesday, actually, the SEC came out. They didn't go out on X. They went out on their blog and announced that these ETFs are all approved. I think 11 ETFs went live at the same time. I would say everything there went as expected. I don't know, Fabio, if you see anything different there. Let's go into those things that we see as expected, and then let's see what we did not get, what did not happen as expected. What, to me at least, also what was very expected was that they went really fast on the trading start, which actually happened the day afterwards. So this was on January 11th, the Thursday. So just the next day, trading start happened. And both, I think from an exchange side, on everything that I think happened on the back end, all these ETFs being able to buy, sell, or do whatever, getting access to Bitcoins, it seems Coinbase is doing a good job there. So from a technical perspective, everything seemed to be very, very smooth. And then the price action to me was partly expected, partly unexpected, but I want to kind of cross that when we get a bit there. Until this point, Fabio, so Thursday trading starts. Anything that was unexpected to you from until that point, except for price action that we can discuss next?
No, I think it was just in line with expectations. We both of us, or almost everybody, actually expected the Wednesday to be the date that it gets approved, first day that trading starts. I guess shout out to the two Bloomberg analysts that kind of covered this to great extent. And almost everybody also agreed that it would be 11 applications, or let's say a lot of applications that get approved at the same time. And besides that, it was okay. So for me personally, and I guess for a lot of people on crypto Twitter, nobody believed it. Like when they actually approved it and they put it on the website, but of course everybody went and clicked on the website, so the website was down. So some people posted a screenshot of what they seen earlier, but others couldn't really see that it was there. So we had so many look, Cointelegraph, the SEC itself that got compromised, and so many, let's say, fake news out there that this thing is approved, that the moment it actually approved, I guess nobody really believed it, or many people had doubts. But everything besides that, and besides the price action up until that point, met expectations.
True. Then the price action. I mean, you can see this on the chart. If you don't have it, if you don't see the picture, you just listen in. I think you can just look at the chart afterwards. We've seen this pump then right after, right up to close to 49,000. So I think the top, depending on what exchange you look at, 48,000 something, 48,800 or something. And everyone was like, oh, now the God candle comes and this is it. Now we're all going to get rich. We're going to see a new all-time high. The exact opposite happened. We dropped within a very, very brief time frame by close to 20%, and we actually got close to 40,000. So we almost went into the 30s again. We really dropped down, and then we kind of bounced a little bit, and we've been hovering between 42 and 43,000 all the time over that since then. So this all happened on Friday last week. Then over the weekend, we had a long weekend because of Martin Luther King Day on Monday. And so Tuesday was, again, yesterday the trading started, but not much price action. So relatively calm. And so before we look a bit into the fund flow, was this surprising to you, Fabio?
A little bit. So, of course, because we saw, we had two instances where we had Cointelegraph tweeting that this thing is going to be approved. And I think we almost saw a God candle. I would say a God candle is at least above 10%. And I think the Cointelegraph moved us 8.5%. Then the day before the actual approval, we had the SEC as an account that got compromised. And we saw a pump, I don't know, I think 5% or so. And if two fake news things can move the needle and the price like that, how is it possible that the actual approval doesn't move the needle at all? So I at least expected, I think a week before the approvals, when we sat here together in the Twitter space, my expectation was that the moment this thing is actually approved, we see a lot of bots or a lot of traders jump on it, and we actually see a price move of maybe 10% or so. Just some short-term volatility with a sell-off afterwards. But we didn't get that, and that price action or that thing was for me the least. I did not expect that. Also, I could have foreseen the price instantly selling off 10%. Like it's approved, sell off. But that also didn't happen. Nothing happened. Like the moment they actually approved it, we just traded sideways, and everybody on Twitter was like, okay, is this it? But of course, when we go and talk a little bit more about the fund flow and if this ETF is actually a success and how these things usually work, I think we will find our answer there. But you could say two things maybe in retrospect. It was priced in, and it was a bit of buy the rumor, sell the news.
100%. I think on the one hand, what surprised me a little bit, I had expected the pump to be a bit stronger initially. I think we did discuss that this may actually be a buy the rumor, sell the news. It definitely became one so far. If I sit here and I would tell my past self, hey, we're going to drop by 18%, I don't think this would have surprised me so much. What did surprise me, and that's what I pull up here, is how strong the other coins actually performed at the same time. So what's very clear here is that this is some selling out of Bitcoin into those other coins, mainly into Ethereum. So Ethereum really benefited from this, and we're going to look into what could this mean going forward. But that is the thing that really surprised me. I had expected if Bitcoin sells off, and it is buy the rumor, sell the news, that the alts sell off even harder, simply because we have seen this with all the fake news prior, right? So I even posted this Twitter meme where there's this table and then this wall suddenly flips over and then Bitcoin sneezes and then the altcoins like completely freak out and USDC keeps sitting at the table and is like, what the heck is going on, right? So kind of this meme on USDC doesn't do anything, Bitcoin sneezes a little bit, the altcoins totally freak out. And I was expecting, hey, if we see basically Bitcoin sneezing again, my goodness, the altcoins really gonna completely get devastated. But the exact opposite happened. So what got hammered was Bitcoin dominance got hammered. Ethereum has been really benefiting from this. And I think Bitcoin has been underwhelming in all this. Before we go into the fund flow here, was that surprising to you as well, Fabio? Because that is something I would have never guessed. So I think the buy the rumor, sell the news, that was something that I would have always said, hey, this could easily be, I can totally see this. A lot of it is priced in already. But I would have never guessed that at the same time, altcoins would have done so well. At least that is the unexpected kind of thing here for me.
Yeah, same. My expectations were totally different, but like, of course, in retrospect, you're always a bit smarter. And what I saw on Twitter, I guess in November and October already, is that narrative that we mentioned last week as well. That the next thing is the next narrative, the next story is an Ethereum ETF, and there are just a lot of traders that kind of, okay, now this thing is approved. It is buy the rumor, sell the news. So let me sell my Bitcoin position and let me go into ETH. And I guess we saw many traders, maybe even institutions, we don't really know who, taking that trade. Waiting exactly for the day of the approval, selling off a little bit of their Bitcoin position and putting it in ETH because they think, okay, maybe an ETH ETF is next. I would not have expected that. I think ETH pumped 10% on the day of the Bitcoin approval, and Bitcoin just went sideways.
The spread is over 20% actually. So since the ETF approval, Bitcoin and Ethereum moved apart 20%. So Ethereum really gaining 20% to Bitcoin. But I want to be very clear for those of us who have been in Ethereum, right? And I've always said that I'm a big Ethereum holder, big Ethereum fan. I love the staking yield and so on. Over the past year, right, 12 months, I was on the wrong side versus Bitcoin. I want to be very clear on this, right? So for all of you who have been mainly in Bitcoin and let's say not in Ethereum, sure, you have been wrong over the last week, but you've been right the other 51 weeks so far. So, but very interesting how that tide kind of shifted here. Let's talk a bit about why this is, right? And I actually think it's 3 reasons. It's not only one. I think it's 3 reasons. The first reason, that's probably the biggest one, is Grayscale. Now, for those that don't know this, we have discussed this so often in the show here that if only a Grayscale ETF had gotten approved, this would have actually slaughtered Bitcoin left and right. I want to be very clear on this. And the reason for this is that all the people who invested in the Grayscale trust could not really get out unless they accepted that discount. And the discount got completely obliterated with the ETF and is close to 0 now. So now it's just a kind of marginal discount, sometimes a premium, sometimes a discount, just based on the arbitrage that's happening. And with that, people are like, man, I made so much money on this, let me exit. On top of that, Grayscale is by far the most expensive ETF. They charge 1.5% per year. And so all people who can exit or want to exit, and obviously there's a tax consideration here, they're going to try to exit because they either made a lot of money or they want to get into another ETF. And you can see this here. You have seen massive, massive outflows, and they've only been increasing. It's going to be very interesting today what's going to happen on day 4. So on day 1, there was about 95 million outflow. Day 2, which is Friday, was 478 million, so about $500 million. And then day 3, which is Tuesday, it was another 590 million. Rumors is, and this is again based on calculations, based on where people bought these things, people are expecting around $5 billion in outflows out of Grayscale in a relatively short time. So right now we're at 1.1 billion, 1.2 billion. So we have a large amount already behind us. And also I want to be clear, normally the later parts take a bit longer. It's just like some people just want to rush out of the door relatively quickly and then they take a little bit. So we've definitely seen massive selling on the Grayscale side. All the other ETFs have had a net inflow. Now, not all these 1.1 billion, 1.2 billion from Grayscale are selling into dollars. Some just want out and want a better deal, so they move into the other ETFs. That's also important going forward from here, because people are going to be wondering, are we going to see more sell pressure? Definitely we're going to see sell pressure, but also we are going to see this buy pressure here, where these ETFs are constantly collecting more and more assets. So that is really, really an important one. The second key thing that I just want to add here, a lot of people are always thinking that any Bitcoin that comes in here was bought with cash. And that is not true. There is a small group around these ETFs who can convert Bitcoin into ETF shares. And this mostly happens OTC. So there's no real impact on the price. And I do actually expect a lot of this happening right now for very simple reasons, because some of these asset managers are going to sit there and say, I'm not going to hold these assets myself. I actually use Coinbase already, and the price that I can negotiate with Coinbase is a worse price than you as an ETF have negotiated with Coinbase, right? So I may pay 0.5% per year with Coinbase because simply my assets are not as big, right? But you as an ETF, you have actually basically the same setup as I have, but you only pay 0.3%. And so I'm gonna actually take my assets and not do it basically one-on-one. I just move them into an ETF. And that way I pay actually less. So a lot of this fund flow here is not necessarily fresh buying. I also want to be very clear on this, right? And then there are other ETFs out there already, and this should also not come as a surprise. There's, for example, in the US, we have the futures ETF, BITO, and there's ETFs in other countries, Germany, Europe, and so on. And all of these ETFs, so BITO and the European ETFs, they're all losing assets like crazy. And the reason it all comes down to one thing and one thing only, and that is fees. So the fees on these ETFs are absolutely ludicrously low. I know that people think, oh my goodness, who pays, I don't know, 30 basis points or 0.3% to hold Bitcoins? I just want to be clear. These are some of the safest setups that you as a retail, even as a retail customer, right? Even you as a company can have. And I also want to be very clear. If you are holding your Bitcoins on, let's say, Coinbase or on Kraken or on the US exchanges, I would really kind of urge you to consider in actually moving your funds into this ETF because you're clearly only interested in the price appreciation of Bitcoin, which is absolutely fine. I don't want to criticize you for that, right? I think there's two kind of reasons on why people buy Bitcoin. First reason, price appreciation. That's it. Just price, right? You don't care about anything else. You want to buy Bitcoin at 42 and you want this thing to go up to $500,000. Nothing wrong with that. I completely get this. If this is all you're doing, I would probably say the safest way to do this right now is via a regular broker and via one of those ETFs. If, however, you buy Bitcoin because you want to escape the system and you want to control your own keys and you want to deal with all this where you own your funds and you own your assets, obviously you cannot have your assets, you cannot have your Bitcoins on an exchange, makes zero sense, right? You need to control your private key. Obviously, this is not for you. And I know you're going to sit there and say, but on Coinbase, I don't pay anything right now. And on an ETF, I pay 0.3%. I get it. I still think the risk of that and the cost of that is probably quite attractive with an ETF, right? I just want to be very clear on this. So these are my thoughts on all that. Fabio, please jump in. Let me know your thoughts.
Actually, the last example that you made. So if you, okay, sorry if I offend anybody here, but if you're a classical boomer and your son or your daughter, they told you, hey, make a Coinbase account and buy some Bitcoin. What these people actually do is they buy blindly, spot, no market orders, no Coinbase Pro, they just buy. And the fee for buying Bitcoin on Coinbase is 3.5%. So if you would buy an ETF, you could hold the Bitcoin in this ETF for 10 years and you would still make a better deal than just buying blindly on Coinbase. Of course, for all the professionals there that buy on Kraken and pay 0.18% and actually, or 0.16, I think is it, for a market order and withdraw to cold storage and all of these things, sure. You're doing much better if you hold it for 1 year, if you buy it on a good exchange, especially if you know what you're doing and if you're placing an order and not just blindly press the button. But for many, many people, and I would say the majority of people that actually buy Bitcoin or are familiar with a brokerage, they probably are going to make a better deal, and it's easier for them, let's say, a peace of mind. Because look, I know many boomers, like my mother and her friends and so on. These people, they love to have one account. They have here in Europe, they have the Giro, or they have Interactive Brokers or Swissquote, whatever they have, their one account. And for them, it's already a pretty big thing to kind of trade their own stocks and to hold them in that account. And for them, it's super intimidating to go onto Coinbase, because just my son or my daughter told me, hey, Coinbase, but they will, there is thousands upon positive reviews and advertisements made for, I don't know, Interactive Brokers, and they feel very comfortable being in that account. And if the ticker shows up there, for them, it's probably the better move to buy it there than to sign up to a shady exchange and get rug pulled. There's always that risk. So I would agree on almost everything you said, especially on the data and the in and outflows. But just to put maybe, if you ask yourself the question, was this a successful launch or was it not? I think there were about between 400 and 500 ETFs that launched in a year 2023, last year, 400 to 500 ETFs. All of them combined had funds inflow of about $500 million. All new ETFs that got launched in 2023, they made about $500 million in fund inflows. In just 3 days, all of the 11 spot ETFs made 10 billion. That's a 20-fold of what all of the other ETFs did in 2023. So it was a huge success. You can clearly see there is buzzing around this asset. There is interest. There is trading. There is volume. There is, you know, everywhere. If you, I read 3 different kind of newspapers. I read the Swiss newspaper. I read the Dutch newspaper, and of course the international ones like, you know, New York Times, Bloomberg, whatever. And in all of them, Bitcoin, maybe not even on the first page, but if the newspaper has a finance section, you can bet it was there. And now maybe I would be very much interested, Julian, in how do you see all of this moving forward? Like, we had a great start. We had this 10 billion that came into these ETFs. How is all of this going to be, you know, be perceived or looked at maybe a year or 2 or 3 years from now?
Yeah, so I think we said this. I'm not sure if we shared it here, but I've said this several times that I am a bit more cautious on the impact of those ETFs over the first 3 months, and I'm way more optimistic and bullish over the first 3 years. And here's the reason: I know for a fact that a lot of the sales kind of cycle for these ETFs takes a little bit to jump on, and it's going to take a little bit for the target audience of those ETFs. So I'm not talking about the target audience that has probably added funds right now. I think a lot of people who have added funds right now are not the real target audience. They're crypto believers, they're Bitcoin believers, and they just want to support this, right? So I think this is not the target audience. The target audience are those who have always been interested but felt doing it themselves was not the right thing. Or now they feel that Bitcoin is more justified, it's better, it's more serious, it has this edification of the SEC. And this sales cycle is not going to happen within days or weeks. This sales cycle is going to take months and years. And that is what actually, I think, in the long term, one question I always ask, right? And to me, this is such a key question. Give me the metric you look at with an investment that shows the value where this thing goes. And so far, whenever I ask this question on Bitcoin, I've always gotten some really weird answers, right? Answers that either didn't make sense to me or it was actually a price metric and just hidden as something else. All these numbers with Bitcoin was just always tricky. Actually, going forward, I'm going to look at one metric and one metric only, and that is AUM of those ETFs. So there's going to be some very interesting buying opportunities for me, and I'm someone who loves to buy when price and value moves apart. So if, let's say, this AUM keeps going up, but price goes down, I actually am going to see this as a buying opportunity. And I'm going to actually see it as a selling opportunity if this AUM is going to trend down and the price is going to go up. And the reason why I believe this is because going forward, I just see, especially for Bitcoin, this is going to be different for the altcoins, but I think for Bitcoin, majority of buying is probably going to happen from the ETF, more and more and more. It's going to take a little while. I think it's going to take a year or two, but it's going to go way heavier in this direction. And I think that the traditional spot buying is going to get less and less and less relevant because the majority of the assets are still outside of crypto. They're not in crypto. Crypto is tiny in comparison to the outside assets. And the majority of the people don't really care about self-custody. They should, but they don't. Majority of people just care about numbers going up. And so they're just going to buy Bitcoin based on numbers going up. So to me, what's going to be a key metric going forward is what does the AUM of those ETFs look like? Now, when is this going to get relevant to me? I don't think it's going to get relevant after until the first couple of weeks, because right now, again, it's going to be a lot of reshuffling. It's going to be a lot of assets from GPTC moving in, BITO moving out, coming in, some of the assets coming out. Like I said, people who have always been self-custodying, saying, hey, you know what? F that. I'm not going to self-custody anymore. I rather pay the 0.25 or 0.3%. So I think it's going to take a little while. But let's say after Q1, the number one metric I'm going to look at is the AUM of the Bitcoin ETFs as a whole. And as long as this number keeps trending up, I think value is going up because at the end, that's what matters. And it's going to be, to me, a key metric. Is it going to be perfect? It's definitely not going to be perfect. There's going to be other metrics as well, obviously. How are the fees? How full are the blocks? And so on. But if I look at value for Bitcoin, that's going to be the key thing that I'm going to be looking at. And so what do I expect? I think people who thought the ETF is going to change everything in the first 3 months, I think they're going to get disappointed. And I think those people who don't have a time horizon to look at this over the next 3 years are going to be positively surprised. That's my kind of take. Fabio, your takes on this?
Yeah, so it's definitely a long-term thing, and what is exciting for me the most is, and there are several things that need to happen until we get there. But I'm waiting for passive flows. So I make two examples. My family here in the Netherlands and a lot of friends, we use a new app. It's a Web2 app that is called Peaks. Not affiliated with them, not advertising for them, but I personally use that. And you basically go into the app, you select a risk profile. You say, I'm super conservative, I'm adventurous, I'm somewhere in the mid, and they make a portfolio for you, and it takes $1 a day, $10 a day, however you set it, and your spare change, and it automatically moves it into a portfolio that is very diverse, has some gold, has some stocks, has some this, has some that, and it does everything for you. And it shows you some nice graphs and how you profit and what's your money going to be like in 30 years and things like that. And these apps, they make it big, let's say, at least here in the Netherlands. And I'm waiting for funds that are on the adventurous side that promise a lot of returns to just incorporate 1 or 2 or 3 or 4% Bitcoin into them. And the same goes, for example, my mother is a customer with one of the oldest Swiss banks, the ZKB, the Zürcher Kantonalbank in Switzerland. And they have very similar products as well, where you basically say, look, I'm this and this age, I want to do this and this, and you pay, 0.5% management fee, and they handle everything for you. And as soon as you get bigger players like UBS or Swiss banks or bigger asset managers that say, hey, on the risk side, maybe it's not just 60-40, maybe we can incorporate 1 or 2% Bitcoin and get our Sharpie ratio up, or we get a little bit more returns. And in the end, if the number goes up, technology for Bitcoin actually works and it keeps working, all of these products will be benchmarked against each other. And if you suddenly have a product that keeps outperforming because it has 1 or 2% Bitcoin in them, it kind of forces the hand of all the other players to add a little bit of Bitcoin allocation to that as well. So the number go up really kind of, if it works, if it keeps working, it will automatically, like a black hole, suck in a lot of capital just because the number goes up, and all of these funds, they are benchmarked and measured against each other, who has the better performance. And in the end, you can basically have a scroll down menu with a filter set to what actually performs the best. The same goes if you use neo brokers like, eToro, for example. You can scroll through all of their funds and all of their tickers that they have, and you can just look what actually performed the best over the last 5 years. And if you see that these products that they're working, of course, more capital will flow into them. So yeah, for me, it was not a disappointment. It was a bit of anti-climax the day of the approval and the day afterwards. But
that I think is a good one. It's the emotional anti-climax that I think was a bit disappointing.
100%. Kind of, I don't know, it was 1 year or 8 months of, it's Bitcoin ETF and talking about it. And then you actually get it. And it's like, there is this one meme where a guy sits in front of his computer and he's looking like this with a finger under his nose, and then the ETF is approved, and he has like this tada emoji, and then life just goes on. And it felt a little bit like that. But luckily, we are in crypto, and there are other things down the road. Maybe we want to, or is there still something we need to address regarding the ETF, or do you want to move forward into what's next?
No, I think what people should be looking at and what decisions they should be making, I think, is just have a bit more patience on that. If you're dollar cost averaging right now, I think it's a really good time. I haven't sold. I am dollar cost averaging. I think the long-term horizon here is really important. From everything I've seen right now, I would be surprised if we're seeing a massive sell-off based on the ETF. Obviously, if there's some economics thing, that's a different story. But I don't foresee right now that because of the ETF flows, we're going to see massive sell-offs. So to me, what I would be focusing on is, again, on the AUM. How is that moving? That's going to be the interesting number. And just dollar cost average. And then, yeah, from here, obviously, the big question is the same going to happen to Ethereum? That's a huge, huge question. We have an approval deadline by the SEC on May 23rd, so about 4 months from here. And maybe that is the reason on why we have seen such an uptick in Ethereum. Give us a bit of some thoughts on that, Fabio, on that
Okay.
color, or what else to add here.
So maybe 2 or 3 things to add. So I think Gary Gensler, if it was just up to him, no public pressure, no Grayscale lawsuit, he would not have been approving the Bitcoin ETF. And just for
didn't he even
there
say
are
this in an
5
interview?
people.
I think he even said this in an interview, right?
He hinted at it, but what it's important for us to understand, there are 5 people. I only know 2 names: Hester Pierce and Gary Gensler. Hester Pierce, by the way, had a fantastic statement after the approval. But there were 2 on 2. So, and Gary was the deciding vote, and he voted in favor of the Bitcoin ETF. But of course, there was so much public pressure, so many people with influence, so much capital, and a lawsuit that they lost against Grayscale. And for me, he made 2 things, or 2. We have 2 kind of sources of information when it comes to the Ethereum ETF. One is a written statement that Gary Gensler wrote on the day that the Bitcoin ETF got approved, where he said he's not endorsing this, and he's very hesitant, and people should be cautious. And he also said that this is a one-time thing for a commodity-based cryptocurrency. Or most of the other, a majority of the other things are securities, and this will not be a green light that more ETFs are going to be following. So this is the written statement, and I basically butchered his words and kind of dumbed them down a lot. And then the other one was a CNBC interview where the interviewee asked him some fantastic questions. I have to say the interviewer did a great job. And Gary, of course, did a little bit of a fish move where he ditched most of the question, but he kind of ended in the interviewer said, asked him if there is going to be an Ethereum ETF next. And he was very, very hesitant and basically ditched the question. He didn't say yes or no, but he said that I think a little bit more of the same, that this is not an endorsement for crypto and so on. So what is my interpretation of all of this? It's definitely going to be a very strong narrative. You can already see this on crypto Twitter. Everybody seems to be talking about it. You can see it in the price. People actually believe it. And the narrative itself is kind of half of the thing. Then the second thing is, I think without public pressure and without a lawsuit, there is no Ethereum ETF. There needs to be senators or organizations, institutions like BlackRock that are going to get behind that and that are going to be pushy. And there is probably a need for maybe 1 or 2 lawsuits to force their hand. Because let's be honest with each other, we know the SEC, we kind of have our experience with them. They're not going to do us any favors. They're not just going and like, oh yeah, we're going to improve this as well, and we're going to do this as well because we're such a nice agency and we really are in favor of crypto. No, we kind of they need to be forced into this a bit. So I don't know if I would put the chances. So many people say it's going to happen in May. I think this is probably very optimistic. I think it's going to take some time. And look, we have one data set, and I'm just going to say this data set is true for Ethereum as it was true for Bitcoin. It took us about 8 months from BlackRock filing for this and actually, this being in the public eye until an approval. So if we're talking about an approval, which, you can still kind of make arguments for both sides, then I guess it's probably going to be in August or so.
Interesting. I think to me, it's going to come down if Grayscale is going to go and file for a conversion of the trust, which I think they will. And if they do this in time, I think, I'm not sure if the SEC is going to attempt to kind of go down the same route. If that happens, then you may be right that they're going to object this. At the moment, I'm still optimistic that we're going to see a May ETF, but I agree the odds of it happening are less than the Bitcoin ETF in January. Not sure if, let's say I would give it a 51%. So I think slightly more than a coin flip. Really, and I would instantly change my odds if Grayscale is aggressively pushing for a conversion. At the moment, I know that they tried in October or November or something, but it hasn't been very aggressive. So there hasn't been much publicity around it. There hasn't been much push towards it. If I see that, then I would instantly up the odds to probably 70, 80%. But because I don't think the SEC is going to want to have another one just saying no at first and then getting slapped left and right. But I think you summarized this really well. Yeah.
Interesting. Do you see any other crypto getting an ETF?
No chance right now, simply because there is no future for that. So there's no futures on CME. I think that's going to be the first hurdle. I mean, Gabriel here writes on YouTube, I think that's actually a very interesting point. If Larry Fink from BlackRock wants an Ethereum ETF, you will get it. Smiley face. I mean, this is a strong point, right? I think, and I mean, Grayscale is applying for the ETF as well. I think, do you know the number? I think 7 ETFs in the history of Grayscale have been not approved or something. So it's like a super, super tiny amount. It's like, yeah, so it would be absolutely insane.
For BlackRock, you mean?
Yeah.
I think they applied for more than 550 ETFs and only like 1 or 2 handfuls got declined. So they have like a 99% approval rate.
Yeah. So definitely an interesting one. Yeah. Do you see another crypto getting an ETF anytime soon?
No, definitely not. I really think, like I mentioned this several times, I really see crypto maybe in 4 categories. There's Bitcoin, there's Ethereum, there's stablecoins, and there's everything else. And also within the stablecoins, there are stablecoins and stablecoins. But it's, I think, a sign of majority that, so one of the most important things that happened last week with the approval of the Bitcoin ETF is basically a public stamp of approval of this whole industry. A lot of things, the narrative will completely shift. It's not some weird outsider things that kids are doing in their mom's basements and that miners in Kazakhstan are supporting or things like that. No, now you have publicly traded companies mining this. You have on every brokerage in the world, you have a ticker trading it. And it's going to be, so one example or one comparison I want to make is before Bitcoin, I used to be a gold bug, and before the 2003 gold ETF, many people don't know that, but gold was not accepted in the public sphere. It was not an essential part of a portfolio or anything. It was looked down on. It was like a debt asset, non-cash flow generating for, gloom and doomers, like people that wish an apocalypse would happen, people that are very distrustful of the government and a bit outside of the system. Gold didn't have a good standing in the traditional finance industry. And since 2003 and maybe a few years after, it really has basically a seat at the table. So if you look at Fast Money on CNBC, or if you look bigger money shows or investment talks like Bull versus Bear, every day they talk about gold. And I kind of anticipate that the same thing is going to be true for Bitcoin and maybe Ethereum a few years down the road, that this move that we get this ETF that is kind of solidifying their position or within, the finance space and really, it's going to be covered, with every finance show. You have these ticker movers, and some of them already incorporate Bitcoin, but I guess this will happen a lot more now. So I guess it's very historic, and probably a few years from now, we just realize how important all of this was, because right now it doesn't really feel so important because the prices are moving.
100%. Do you want to share a bit about what's happening on the DeFi chain side? I think, always interesting. We've just had an update about an hour ago internally where we discussed a couple of things and what's going on. Do you want to share a few things?
Yeah, so we're in January, 17 days in, and important now. So the DeFi Chain Labs team, which consists of two parts: one part engineering and one part marketing. And I'm solely going to focus on the marketing part because there's I have a little bit more insights there. And it's basically preparation for the years. So have a content strategy. What do we need to talk about? What can we talk about? And as an open source community project, we kind of want to put the community into the center. So this means highlighting the projects that are building and highlighting the members or devs that are building in it. And of course, educational material around that. There are certain, at the moment, we are finishing on certain exchange listings. So super exciting. I cannot go into that which exchange yet, but there are, we are finalizing an exchange listing. Then we have in Q1, the main campaign is basically it has 3 pillars. It's basically 1 month, 1 month, 1 month. And we are in the first month, in the first inning. And the first part is a social campaign, which, if you go, for example, to the DeFi Chain Twitter, you will find it like yesterday or the day before it was tweeted. And it's basically a campaign where you can follow this, subscribe here, sign up for the newsletter, things like that, and you can earn points. And with these points, you can earn or win some DFI. And the social campaign is part one of that. The second one is going to be focused on the ecosystem itself. So with all the projects and things that are happening within the DeFi Chain ecosystem. And the third part is going to be on chain. And all of these are basically missions. It's very gamified. You can participate without spending any money and fulfill these missions and earn some DFI as a reward. That's basically from a marketing side that the bigger things that are going on. We kind of reviewed that last week. We had an event in Munich on 7th of January, and the event was perceived overwhelmingly positive. There were a few hiccups with the live stream and so on, but for the attendees, for the people that were there, it was a great event. So we want to do that again, probably, I don't know, let's say during summer, and maybe a bit bigger and a bit better, especially on the live stream front. That's probably the most important things. On the engineering side, I don't want to go out on a limb, but to sum it up without giving away any timelines and any nitty and gritty things, just very bird's eye perspective. I know that they are working on light wallet improvements, so on the app side, on infrastructure improvement to kind of smooth things out, and that there are a few bigger things down the road that are currently being conceptualized and kind of planned out. And if you follow any of the DeFi Chain Social, I think end of this week, there will be in-depth roadmap published on all socials. So I don't need to give them away and spoil anything. It's all going to be in written form available for everybody. That would be my summary.
Cool. Yeah, that sounds really exciting. I mean, definitely needed on a lot of things there, so it's good. Other topics that we need to discuss? I think we covered Bitcoin, Ethereum, we covered DeFi Chain. Are there other things that you see right now, questions that people have?
Besides the ETF stories, I think the next bigger thing that we all can look forward to is the halvening. And maybe for next week, it's very soon, 4 months. Maybe we can focus
3 months, actually.
or kind of
3 months. Yep.
Oh yeah,
April, okay. Beginning of April.
Yeah, of course. Maybe we can focus the next Twitter space a little bit more around macro now that we kind of talked about everything regarding the ETFs. I don't think there will be any major ETF specific news from now until next week. But there's a lot to talk about when it comes to macro. So I don't know, maybe I can just suggest this live that we kind of keep this session slightly shorter than we're used to. So not an hour, but maybe 50 minutes. And then next week we kind of do a macro deep dive on what's going on in traditional markets.
Sounds good. Sounds good. Great. Then if you don't want to miss out on this, make sure you follow us, give us a like on X or on YouTube, and then we're going to be talking again with some nice updates. Fabio, appreciate it. Thanks for the time, for all the insight. Thank you everyone for being with us, supporting us, listening to us, and see you soon. Thank you all.